Hey everyone, it's Will here with Flow Trade Effects. I'm bringing you guys a new video. This is going to be a trade breakdown. I'm try to keep it pretty quick, maybe under 5 to 10 minutes. But I do want to break down this opportunity that I seen last night, and it's going to be marked by these two green lines and the red line here. These are not active trade lines. This trade is not active, but I do want to give you guys the parameters of what I pressed of what I put in last night to see the result of it today. It was it did end up being a 2 to 1, like 2 to 1 ratio. So that was pretty good. But let's go ahead and get into it. First things first, we always start off on the 1 hour time frame, or at least I always start off on the 1 hour time frame, and I'll go back about 6 days to account for the most recent price activity, which is 1, 2, 3, 4, 5, 6. So as you see, this is the 6th day marked by this extreme low point right here. I could have marked off this high point, but the market obviously has several levels in which it would have to interact with before it were to reach this ultimate high. And considering this current market for the NZDUSD is at an extreme point below, I didn't feel like it was necessary to mark off this level without expecting some form of a black swan event, which would have to move the market around 200 pips in one session. So since I wasn't expecting anything of that nature and I didn't see any major catalyst to cause something like that, it wasn't really on my mind. But ultimately, I marked off the low end of that range because I did see that it had almost been retested um, one time before starting a new trend to the low side. And since usually I look for these exact same patterns just on a smaller scale, sometimes on larger scales like this, but they have to line up and be a bit more valid than this one specifically. But I do like to have breakouts of levels and then pullbacks of levels. And this would be like a good example of what that looks like. But usually they're a bit more flush and they line up a little bit nicer. Now, since this is only one broker giving me the feed of one broker, you can expect that different brokers might have different prices around this level. So that's why you should always refer to certain support and resistance areas as areas or zones as opposed to a specific price of resistance. Sometimes you'll get a nice flush break and move, but oftentimes you're going to get the feed in different prices, different spreads, different variations from brokers across the board. So you kind of want to give room for these things to happen as well. But moving forward, like I mentioned, this was the first swing that kind of retested this little support area, turned into a resistance level, which is what I like to see. And then you see the market had took a nice swing down, probably for about 50 pips, I want to say. Yeah, about 50 pips. So then the market comes back up to here, and instead of retesting up to there, we get we get these three SMAs. Now, with these three SMA points, we can see that the market lined up. Excuse me. We can see that the market had lined up and came into this area and began to drop again. And it didn't drop all the way for the full 50 pips, but it did drop out of the range that it was making, just a smaller range. You can see right here, this being the upper portion, this being the lower portion. And ultimately, the market did not exceed yesterday's swing high. So today, well, not today, but for this day right here specifically, I would have still been looking for shorts. And the market structure is still down. The market has not broken above this little area of resistance right here. And this swing low has been broken by this right here significantly, even though the market came back to close above it. Still gives you insight and shows that the market has the ability to drop down to this point. So at this point, we would only be looking for shorts. It'd just be a matter of time and a matter of opportunity. Market kind of showing us that, okay, yes, this is a good opportunity to chop. But let's go ahead and move forward. You see that instead of dropping right here and exceeding yesterday's swing low, we see the price retest one more time, and it almost creates a little double top area right here. And then we were able to draw and connect another swing point for this trend line to actually make a trend line. At first, we did not connect the same trend line in the same session. We used two specific different days to create this trend line, which I think is more powerful. Using one trend line for one session might work out for that day, but if you can connect multiple days with one trend line, then that is just more, it just seems to have a little bit more power to it. Now, as we move forward to the current day, we've seen that the market had dropped considerably for another 50 pips. So we see that these swings now are breaking each other, and they're each very consistent and healthy, meaning they're moving around the same distance each swing, which is nice, and that's what you like to see. Not to mention, when it comes down to the pullbacks, they're relatively small compared to the swing. So a pullback might be 25 pips, and then the drop might be 50 pips. So that's easily lining up for a 2-to-1 ratio as long as you're patient enough to wait for it and you're able to recognize that it's actually happening. So now as we move forward, we've seen the market create another low structure, right? A low of the structure right here, and then it comes back to pullback. Now this pullback was a bit stronger than the previous pullback, moving nearly 30 pips. So we know that the market moved up about 30 pips. It still didn't break yesterday's swing high and came relatively close and made contact with the trend line that we have from the past 3 days. So now this is our third day, and I don't remember exactly where, but somewhere I read that the market moves in waves, like multiple waves. So you might have wave one, wave two, and then if this is wave three, then this could be, a good determining time for this specific little trend. Is it going to continue to pick up speed and is it going to be stronger, or is it going to start to fade out and retrace back up? Because every market needs to breathe at some point, right? So if you're in a downtrend, sometimes that market needs to come up eventually just to go and um, give it more inertia to drop again. I don't mean to try to use these big words because I'm not very scientific, but at the end of the day, I'm just trying to emphasize the point. Like if the market's been going up for a long time, as we see here, eventually the market wants to drop and try to breathe. And after that, the market does drop and try to breathe on the way up. If it doesn't make it, then that kind of gives you an indication that, okay, maybe this market is ready to actually switch as opposed to just going and continuing back and just building up speed. Now, as we see here, we can get a little bit more specific as to my trade specifically. You guys already know from what I broke down so far that this market has been in a downtrend, so I've been looking for shorts. We have lower highs and lower lows being made. Um, so as we see the structure, we know that the market is in the downtrend at this point. We also have these SMAs kind of directing us in the same direction, and noticing that they're all relatively parallel also gives us extra confluence to know, okay, we should be looking for the downtrend at this moment as long as there's no significant shift in momentum that happened at this range right here, which is what I did not see. I did enter at this candle specifically right here. So after we got this nice engulfing candle outside of this SMA range, I was able to put my trade right here with a stop just above that engulfing candle with a little bit of room for spread. And then I believe it was about 10, I think it was, yeah, about 10 pips towards the upside for a stop loss. And then just about 30 pips to the downside. I think it was about 23 pips towards the downside for my take profit. So easily a 2-to-1, approaching maybe a 3-to-1 ratio. And then as you see, after I entered my trade, this is why you can't have too tight of a stop, and you have to actually give the market some room. because after I did enter, the market kind of fell into this indecision looking candle where it retraced almost all the way back up to my take profit or to my stop loss before it ended up closing again higher with no momentum and then still following the lower low, lower high structure right here because the market failed to break above even the high of the day. So that gave me more comfort, although I didn't sit here and watch it. The only candle that I did watch close was the second candle after, but then shortly after I just went to sleep. But um, but yeah, within 8 hours, this trade was completed easily for a 2-to-1 ratio. And then as we see now, it's about 9 a.m. and the market is still dropping down, closing, and it just hit the bottom of the swing area with the most recent swing low. So that's pretty much why I set my stop. And when I noticed that I can get in a good trade, a 2-to-1 ratio, at least before the swing low was hit, that also gave me another confluence because I like to see when the market lines up, like mathematically or like however you want to view the market, when it lines up and snaps together, because I feel like everything in the market always happens specifically for a reason. So when you have this situation right here that occurs where you're able to see a 2-to-1 ratio being offered, I like 2-to-1s. Sometimes they'll go further, just kind of depends on where you're entering at. But me entering like London session, for example, and then waiting one, maybe two sessions before my take profit is hit, kind of usually offers the 2-to-1 ratio. Sometimes you'll have more, but that's just kind of what I keep, like I like to aim for, just to kind of keep it conservative. But um, but yeah, you see how the market came right up here. You see the high of the day, and even if you were to go a little bit further and call it 100 or 13 pips to the upside from this point right here, you would still be able to get 26 pips towards the downside. So I hope that makes sense as far as how I view when the market is going to move and how I try to use that to enhance my probability of the market moving in a profitable way for me, or how to make a decision that might be in alignment with how the market is going to move. Because at the end of the day, it's all about flow trading and you should be flowing with the market. And if the market intends to move down, then it should be able to show you its hand and a little bit of an indication that, okay, I'm going to go down. And if the market wanted to go up in reverse, it should have been able to show you a little bit that, hey, I actually want to go up. Now, if I would have entered the market at this point and for whatever reason I was thinking buy, I would have had to have a stop loss either here, which would have been 12 pips, here, which would have been the start of the day at 13 pips. So either way, it was offering pretty much, we were pretty much right in the middle of a decision making point if you were to look at the market from where I actually started from. Now, if we were to have this trade opposite towards the upside, where would we have been at with this specific market if we had not paid attention to the fact that, okay, the market's been dropping for a couple days, maybe it's time to go up? We would have to be at 26 pips, which we would be aiming for yesterday's high, which number wise or mathematically, there's plenty of space to do that. But guess what? Now we have to fight through this area right here. We have this trend line also at about a 1-to-1 ratio we'd have to get through. And then, well, the sky is the limit. No, actually, the yesterday's swing high would have been the limit, or yesterday's or the day before's swing high would have been the limit. And then there's ultimately this wall right here, which has been a pretty consistent or been a pretty strong resistance area that we were not able to break through for the last 3 days. So I hope that makes sense. And it definitely adds into my arsenal when I'm looking for making trading decisions because it has to make sense and it has to flow with the market. Now, I just showed you guys exactly what I did for this specific trade. Nothing too heroic, nothing too super, but it was, as you could tell, a profitable trade. Now, when it comes down to these decisions, I just like to use my price action. I do use these SMAs as added confluence, and I do use trend lines at times. They're not my favorite tool to use. Mainly, I just use these horizontal areas just to mark where I like to, see the supports or resistance. And I usually just try to use the most extreme, or not the most extremes, but the most relevant ones. So, for instance, I didn't mark off this level here. I mean, in hindsight, we could have potentially used that level, but if we had marked off this level, then we'd still have to have a stop somewhere above here, even if we were going from here, and that might have thrown off our support and resistance, or that might have thrown off our risk to reward ratio on this trade. So instead of using such a wide and mechanical type of view on it, I'd rather be a little bit more intuitive just to be able to see exactly where things are going. And yeah, that's pretty much it for this trade right here. I appreciate you guys for tuning in, and I hope this was helpful. If you have any questions, you can comment below. If you do like the video, give me a thumbs up. And if you want to see more, then go ahead and subscribe. I try to post up more consistently, but for a while I did go through a time period where I didn't really want to be public with my trading. I really just wanted to take some time to myself to go ahead and get you know, work out a little bit of kinks in my system, usually mostly with my psychology, given, I had a good amount, had a good run last year, and I think it was starting to get to my head a bit. So I had to take some time to remember that it's not about the money, it's actually just about the skill. And if you know what you're doing with the skill, then obviously the money's going to follow. So I hope that's motivation for those of you who are maybe trading and you can obviously tell you're profitable. You're just having a hard time getting the funds or the capital there to make it worth your while. So there's definitely light at the end of the tunnel. I'm just going to say that. And also just say, just keep honing in on your skill because eventually the money will come. So that's going to be it for this video, y'all. I appreciate you. It's Will signing out. Later.